Welcome to Invest. We talk about investing, finance, and professional development. As a record time of exactly 11 and 11, make a wish, guys. On the 5th day of 2023, Ethereum closed $1,249, about 0.54% so far. On the overall crypto market, I would say across the spectrum, it's been relatively muted, not really moving up or down, but obviously the altcoins out of the equation will be a little bit more volatile across the spectrum. Currently, the lowest currently down 3.4%, while the highest is around like 1.5% so far. Yesterday was a relatively volatile day, but today is definitely more muted. And on the media front, there's been a couple of catalysts that is interesting that's perked up today. Just take a look on the first one. So obviously the job report coming from the private payroll number from ADP came out to be seems like meeting expectations, and exceeding in certain levels in the database as well. And take a look at that on more of a high level synopsis. It seems like with respect to the overall market, it digested positively in the first half of the couple, I would say, the first an hour and 30 minutes. But as the day durates, which it hasn't durated that for that long, we've been only, couple hours since opening. Take a look at that on a high level. Stock opened lower after the ADP payroll report showed that the employers added 235,000 jobs in December, well above economists' estimate, which is a good thing. Wages also increased more than anticipated. Another sign is that labor market remained hot, which makes sense. But we also have to caveat that with the travel season and also with the holiday season around the Christmas time frame, because we look at historical number, what happened during travel season. And later in the morning, weekly jobless claim came in below expectations as show a drop in continuing claims. And with respect to Mike Lowengartz of the Morgan Stanley Global Investment Office, and again, take this with a grain of salt because they are ultimately a sales and trader. While we will get a better overall picture of the job market tomorrow, a private payroll beating expectation and jobless claim coming in below are indications that the labor market remains resilient, which I can agree with that. These come on the heels of a big name companies announcing sizable job cuts, and there's no doubt the market pressures are waiting on companies, but it remains to be seen while hiring will slow demonstrably. So seems like it was a positive report, but the sentiments from investors are still lingering on. And if you look at other news, it doesn't really support, right? You could see that with respect to like just some of the basic consumer retail companies like Bed Bath and Beyond. Seems like the share has kind of fell off the cliff after the company warned a potential of bankruptcy. Knowing the fact that the company's on a lot of lease, 10-year lease that they have to hold on their corporate balance sheet perspective as a capital expenditure on a month-to-month basis. So I'm not sure how many stores Bed Bath and Beyond has, but with the inflationary pressure, it will have a direct counter production to purchasing behavior among consumers. So that will hinder the profitability, and obviously for them to be able to sustain paying their debts, but also to keep themselves profitable will be very difficult, right? So it's similar to like my experience when I was working in investing in the private side. I used to work in private equity, and I was on a company called 24 Hour Fitness. I don't know if you guys have heard of this before. From US, I would say, you guys would be more familiar with this. It's a gym franchise, and they have about 450 stores the time that I was working with the executives on. And they had a split of like 60 to 40%, 60-40 ratio of leasing to owning real estate properties, and obviously 60% of rental or leasing. When there is a diminishment on the consumer purchasing behavior, it will have a negative direct correlations to the profit margin that the company can generate on a month-to-month basis. So that's something that we You know, it does well when, you know, all these gyms are subscribing, or when Bed Bath & Beyond on the retail store by store level are doing well. But when the whole macro economy is you know, taking more of a downward trend, it will be difficult for them to get out, because think of it as like a large anchor ship, and when the anchor ship is bleeding, and is in need of fuel, they need to really replenish and you know, kind of just rebalance the corporate structure by either closing down stores or laying off people. But most critically is the capital expenditure coming from the lease front, which is quite sizable. And when the needle kind of shift on the wrong side, next thing you know, they've been bleeding millions of dollars on the month-to-month basis, and bleeding month like millions of dollars on a month-to-month basis is not a proposition that can be viable, you know, for the survival of the company. So that's why, you know, the company, as a public company, their fiduciary duty is to, you know, after triangulating with the CFO and obviously the CEO, is to communicate to investors on the potential trajectory on leading into a potential, again, bankruptcy going forward. And then on the tech job side, seems like Stitch Fix is also planning to do another 20% job cut as the CEO stepped down. So obviously this is probably, I'm not sure what's going on politically, but seems like with the job cuts and CEO stepping down, something internally is troubling within the company. But seems like Katrina Lake, who is the founder, will be stepping in to try to sustain the survival of the company as well. And then other news that I'm also seeing would be Putin seems like to order ceasefire over Russian Orthodox Christmas, and also Biden is also planning to visit, or is on his way to visit, U.S. Mexico border on Sunday, as White House rolls in a new immigration rule with respect to the Mexican and U.S. relationships. And then lastly, what I'm seeing on the list would be the New York AG accused former Celsius CEO of defrauding hundreds of thousands of crypto investors. Seems like there's just like we cannot really get a break. It seems like you know, crypto is still wild wild west. Another accusation for another prominent CEO in the crypto space. This time the Celsius. And before we dive into technical, let's just take a look at some of the high-level synopsis on the key macro factors that we need to understand. So it seems like for this month of Jan, the FOMC meeting is going to happen on the 31st and the 1st of February. Interesting. And then March. So basically, Jan and Feb will be combined into one. And then we have basically about 2 months of separation until the March 21st to 22nd. And then take a look at the ARK Invest selling report or buying report. I would say this is definitely more of a selling report. You could see that as of Jan 4th, which was yesterday. It was definitely more of a heavy sell day compared to the buying activity. And take a look at BlackRock as well to see how they were thinking about the job numbers that's coming out. They're taking you know, a relatively bearish approach as well, as you can see. Across the spectrums, definitely a heavier sell day than a buy day, just as a similar mindset to our ARK Invest. So take a look at the technical. I would say it hasn't really changed that much since the last video that we did 2 days ago. It seems like on a daily front, we are still, you know, sustaining the golden cross that would form, which ideally allow us to go up to the next level of 1275. But is it sustainable? No. Now we're just kind of gliding back down to the next level of comfort, which is 1250. And right now you could see that we are getting blocked to get to a below level, right? You could see that we got rejected as we reached to the 56 out of 70. The next level down is going to be 48, and then the next level down is going to be 42. But on the weekly front, you could see that we've been quite extended for quite some time. So what that really means is that we're still in the bearish trend overall. And I think the golden cross has already been mostly baked in. We're looking to form some sort of an apex as we are reversing down, and I think we are already in transition to reverse back down to a lower level, and the lower level is going to be somewhere around like the 12.25, and subsequent to that would be the 11.75, 11.50 level, all the way down to 10.50. But as we get over the hump, right, which we have looked at the CPI timing and the FOMC meeting timing, and obviously tax season, corporate earnings, and etc., we should ideally see some, plateau on the monthly front, and then eventually reverse up from here. And then the timing horizon, what makes sense the most would be sometimes in like Q2, which I think will be logical. And this is applicable to Bitcoin as well, right? Like very similar on the monthly perspective. Weekly perspective is large separation. It is looking to kind of come down as we get to a next level of 37 out of 70. Maybe even all the way to the 41 out of 70. But with this like elongations and large separation that we've been doing for a while, I don't think it's sustainable for too long. And then on the daily, you can see that with respect to the cross section, we've been crossing up for quite some time. So this bullish trend is long durated, and you can see that the golden cross is already starting to form some sort of a plateau, and we are going to slowly reverse back down now. So coming down to, again, lower level of 16,000 firstly, 15,500 secondly, and then subsequent to all the way down to ideally 15,000. But I think 15,500 will be a critical level for us to get the support, and it will be important for us to stay above that level. Okay, so I appreciate you for joining me today. It's a relatively a little bit longer one because of some of the news activities that's percolating, in the beginning of this year, so it makes sense in a way. But the main events that we should be expecting going forward, beside the ADP job numbers that came out on a more of a historical level, I'm not surprised how we beat the expectations, but we're still in a downtrend. The main catalyst that we need to really look out for is still, the upcoming FOMC meeting on the 31st and then the 1st of February. Okay, so appreciate you. Have a good day, and I will check you on the next one. Take care. Bye.